Okay. Um, like I promised in my last post, I'm going to analyze and post the video of the trade so that we can all take it together. So lately, actually, I enjoy analyzing on my phone. I enjoy sitting down analyzing on my phone than my system or my tab or my monitor. So I just sit, carry my phone and analyze on my phone. It's just more flexible for me than sitting down in front of monitor and stressing myself. So let's look out to V10 this morning. Yeah, I want to analyze on V10 this morning. If we are to check very well, so that V10 has been bearish for some times, for some weeks. It has been bearish. Let's check the monthly time frame. Yeah, it has been bearish for a long time. This video is going to be a little bit longer because it's a full analysis we're going to be doing. So let's just watch and take the trade together. Then it's going to have part two of how the trade went, if it's actually moving our favor or it went south. So let's see. So this is the monthly time frame. We see that the market has been creating series of lower highs and lower lows. Yeah, highs and low. This particular guy was supposed to break this low, this low here. So I think this is what we'll be looking at. We'll target the market coming down to break this low. So don't forget, this is monthly time frame. So let's go to weekly time frame to see what's happening there. Yeah, as you can see, this guy is coming to break this low here because the market has been creating series of lower highs and lower low, lower highs and lower low. So the market has created a lower high here, coming to sweep this particular guy up. So let's look into how we can join flow with the market to break this low together. Right. So let's go to daily time frame to see what we're going to have there. All right. Remember, this is the low. This is the low that we are actually looking into for the market to clear off, right? So now this is our daily time frame, and what I can see here is market creating a break of structure here. Let me mark it out. Let's mark it out. A break of structure. Honestly, you guys are trading with phone. You guys are the real OG in this industry, because bro, it's not easy. But let's see how it goes. Let's use this instead. Okay, so now this is my break of structure to the downside, and this is my break of structure to the downside. Yeah, so I've gotten my break of structure to the downside, so it shows very clear that this guy is still on downtrend. So let me go to my 4 hours to see what's happening. I've actually gotten my break of structure on the daily time frame. So let's see if it's going to align with the remaining time frame, because I always check all the time frame to know what is happening, if they align together. Yeah, if you have to check very well, you see that this our break of structure from our daily time frame is actually in alignment with our 4 hour time frame. Now this guy here is my major break of structure. I can actually go down to my 30 minutes or let's say 30 minutes upwards to look out for my minor break of structure at this particular zone here. But before then, let's look at this. Let's look into this major break of structure on 4 hours time frame. So this is the major break of structure here, And what I am having here is the impulse move to the downside. This big impulse move to the downside indicates that the market is still on a bearish movement. So now, after this impulse move, what really happened? The pullback, which is my liquidity. You see this guy here, this pullback. After this long impulse move here, this pullback that happened, that stopped here. You see, you actually look as if it triggers this guy, but it doesn't. Let me zoom it very well for you guys so that you can see. You see, if I have to look at it very well, you see, yeah, it didn't trigger it. So it's just giving us some fake movement. So this guy is going to be our inducement liquidity. This guy resting here. Yeah, it's going to be my inducement liquidity. But then I have to measure it to know if it's giving me 50% and above, or it's a valid inducement for me to know if I'll be using a breaker block or an order block as my entry. Understand, right? So honestly, everybody try. So yeah, let's measure this guy here. So I'm going to measure this guy from here to here, from here to here. So this is my Fibonacci tools, and I'm going to measure 100, 50, and a 0. Yeah. Now you see this is our pullback. Then the movement back to 50%, it only gives us 50% and a bit. Yeah, only give us 50%. I'm very sure that this guy is coming back to pick our order block. Reason being that he only give us 50% and the guy didn't break this previous low that we have here. I think this guy pull down, break this low, then we might actually use this breaker block entry that we have here. But now I'm very sure this guy has picked this 50% and is coming back up. Now, if this guy is going to pick this as expected and pull back up, then definitely the market is coming to pick this order block as our entry. So let's anticipate for the market coming to pick our order block instead of breaker block. So this is it. So this is where my order block is sitting down. So let's clear this guy. Now let's go to 1 hour time frame where we're going to be picking our entry, because most of the time I use 30 minutes and 1 hour for my entry. But since I'm going to be waiting for the markets to do the whole thing now, then I will be using 1 hour as my entry point. Now this is it. This is what I'll be looking at. I will actually wait for the market to push up here, then I'll be selling down to this particular zone. You know it's going to be a long trade, obviously. So this is what I'm actually looking at. The market bouncing here and then coming down to this zone. So this is what I'm looking at on V10. So we have to wait for the markets to pull up here, take our entry on the other block, and we hold down here. So if you have any questions about this little analysis I did on this trade, and this V10, you can drop it in my comment section. Let's wrap it up together. Yeah, we'll have to wait and wait and wait and wait and wait. So let's wait together.